The operating profits of South Korea's top 10 business groups more than halved in the first 6 months of this year. Now, the slump is mostly being attributed to the weak semiconductor market, not only here in Korea but worldwide, as well as trade tensions between the United States and China. Kim Hyo-sun with the details.
Major South Korean conglomerates suffered a major decline in their operating earnings in the first half of 2019. According to market researcher InfoBix, the combined operating profits of 90 listed companies affiliated with the nation's 10 largest business groups hovered around $17.5 billion in the first 6 months of the year. This is a staggering 53.5% decrease from a year earlier. The operating earnings for the second quarter in particular plunged a whopping 63% on year. The market researcher points to weak global demand for semiconductors and the prolonged trade war between the U.S. and China as the main reasons for the drop.
The conditions facing semiconductor industry would not be worse, but won't get better soon either. As the U.S. China trade tensions escalate, conditions will not improve in the short term.
Hanwha Group had the biggest plunge in operating earnings, down 72.8%. Samsung Group and Hanjin Group's operating earnings dropped 65.9% and 63% respectively. However, it wasn't all doom and gloom. Hyundai Motor Group's operating profits jumped 38.6% thanks to strong demand for new models and the weak local currency. As the above figures do not reflect the uncertainties caused by Japan's trade curbs and the pro-democracy protests in Hong Kong, South Korean conglomerates are expected to face even more difficulties in the latter half of the year. Kim Hyo-sun, Arirang News.